This is WPSL Port St. Lucie, the talk of the Treasure Coast.
It is 10:07 at WPSL 1590, the talk of the Treasure Coast, and you are on Money Info. Brought to you by Princeton Research, where you can get that great research paper every weekend. Comes out on Sundays, and boy, chock full of information with the one and only Michael King in Las Vegas and Charles Moskowitz in lovely Beantown. Hey, good morning, guys.
Good morning. And Tim Connolly in Houston, Texas.
Oh, my goodness. And it would just happen to be what timing for Tim Connolly when we see that the oil exports are going up in the U.S. and OPEC is crying the blues. Is that right?
My heart bleeds.
You're so sentimental. Well, tell us what in the world is going on, Tim.
Well, I will tell you this: we'll have the near-term discussion, and then I hope Mike got that chart for you of 5-year hedges out that I sent to you based on
yes, sir.
This morning's quotes from Cargill, and you'll see the story of what oil will look like for the next 5 years, unless somebody drops a nuclear bomb in the middle of Iran, Saudi Arabia, or Russia, or all three.
Yeah, it's called all the above, right?
Yeah. Well, any one of them would throw the market into disarray, but I don't think any of them are going to get nuked. So we may have to just deal with some assumptions of what the new normal is. One of the things that I think all of you, as the astute traders that you are, have been seeing is there is a real support level right at $53 on oil. Now, given we just reported record inventories, given the U.S. is now exporting record amounts, we are now up to we're about 350,000 barrels short of where we were at the top of the boom in domestic production.
Are you serious?
All of those.
Wow.
Yeah, we're at about 9,150,000 barrels a day now. And we'll be at 9.5 million by summer's end, without question. There's no question whatsoever. We may actually hit 10 million barrels by next spring. Now, we domestically need 20 million barrels, so this is not such a bad thing. But we really are, as you pointed out, we are now becoming competition to the Middle East. And yet somebody is supporting a $53 bid on oil. And so I'll throw that out to you guys, and then I'll give you our theories and the traders we've been talking to. Who's bidding oil at $53 and why?
Charles Moskowitz. Oh.
Not a clue. I sure hope it's not just the speculators.
Hey, Charles, get a little closer to your microphone. We can barely
Yeah,
hear
we
you.
need you closer. Can't hear you.
Yeah, I said I sure hope it's not the speculators.
You hope it's not
Really
speculators. Gee.
I hope
When have speculators ever gotten into the market, Charles?
at the top. At the top. They always get in at the top. That's why I'm hoping it's not them.
All right, Tim.
Well, I think your initial suggestion we believe is correct. So let's keep driving down that thread.
Okay, so how far down do you want to go?
Whoever it is laying out, we're talking $10 to $50 million, sometimes worldwide, supporting this bid. Who's got the money, and who could spend that money and shield themselves from market scrutiny?
Warren Buffett.
Not a clue.
Yeah.
Who has the greatest vested interest? You got it. The Saudis want to float an IPO at the absurd valuation of $2 trillion.
Yeah.
What? $2 trillion?
Yeah,
$2 trillion
Aramco.
is what
Aramco.
they floated as their preliminary draft, the Saudis. Now, nobody believes $1 trillion is the highest that I've seen, and analysts I respect are saying $500 billion to $750 billion. But the Saudis need oil to stay up to their IPO. And unless there is a significant change in that, I do believe that we could see oil drop after the summer season, and maybe it would drop after their IPO, supposedly somewhere in this next 6 months. But there isn't a lot of sensible support for oil at these levels. It's just we're producing it more, we're producing it cheaper, we're producing it smarter, and the Russians last month, for the first time, Charles, I know you know this, produced more oil than the Saudis.
Yep.
But the Russians don't have the dollar currencies that the Saudis do. Remember, it has to be somebody with ready access to dollars, lots of cash that they can hide away from the rest of the world. It can't be anybody but the Saudis.
Wow.
And they've got the biggest reason for doing it.
Man, you always make news on this show.
Well,
I mean,
I'm just a rabble rouser. That's all.
we have not seen this on Fox Business nor CNBC, but Tim Connolly breaks it on Money Info. I love it. Wow.
Thank you. And we really have some sound basis for this. I've actually been polling some traders here in Houston, which Houston is still the trading capital of the world in oil and gas. And these guys all believe that's what's happening because there is no other credible answer. And if all of you have heard of Occam's razor, when there is no other answer, the answer is the most obvious one.
Wow. That's mind-boggling. So when is this Aramco APO thing going to be floated?
They're in the process now, so you just need to be watching when that IPO goes off is when we're going to see support stop here unless demand has picked up enough to support it. Now, we are seeing a lot of indications. Last week, Exxon, Shell, ConocoPhillips all did record write-downs of their reserves for the first time in their history for Exxon and ConocoPhillips.
Okay, explain that to the layman. What do you mean by that?
Here's what that means. For many, many years, the oil companies continue to explore enough to either replace the reserves that they're taking out of the ground each year or even to increase them. And it's been a significant marker to be able to say for Exxon that we've never failed to replace the reserves that we sold that year. Well, the last 2 years, CapEx is off by many, many hundreds of billions of dollars. And they were still, until someone at the SEC and a few astute analysts started saying, well, wait a minute, if you started pulling all your CapEx off in 2015 and again in 2016, how are you maintaining your reserves at the levels you say they have? And now they've gone back in and revalued those reserves and have taken big hits. And this could be what gets oil to a reasonable level and stay there. But once again, the long-term charts that I sent to everybody this morning don't tell us that. The Cargill chart that hopefully, Mike, were you able to get that out to all your co-hosts this morning?
I sent one to Greg and Charles.
Okay, well, Charles, take a look at that 5-year. The top line is Brent. The bottom line is WTI. The market now believes we're in backwardization on our 5 years price on oil. It doesn't believe it's going up. It believes that it's going to be largely level and then begin to dip from 55 to 53 in 2018. And that's because the institutions of the world that buy all those long-term contracts believe that we're going to be efficient and believe that the oil business is going to be more like a manufacturing business than a wildcatting business for the foreseeable future.
Now, what does the new EPA, if you will, what does that mean to your industry, Tim?
Nothing. Absolutely nothing.
Really?
What it means for the time being, all it means, the only EPA issues that could have had some major effect on the industry were these requirements that now we would have to measure the methane we produce and then ultimately recapture it and sell it, and it would pay for all of its own costs, which was complete and utter garbage. So that rule's being set aside. That's a big deal. That was a multi-billion-dollar deal that for a smaller independent like our company, Texas Gulf Oil and Gas, it had the ability to actually put us out of business because those methane recapturing devices that they so blithely describe as not costing that much never cost less than $40,000 to $50,000 for even a small well. And you're talking about really killing the small producers. Well, that's been set aside. That's good. The second thing that has been set aside, which won't affect how people explore, but it does affect how they negotiate, are these stupid rules to have to disclose what cash bonuses you pay to countries for their oil, because that's the ultimate in proprietary knowledge. Why do you want everybody to know out there that how much you gave per acre for your Kazakhstan acreage or your Nigerian acreage? And yet all the thought police in Washington in the Obama administration thought that's what we had to do to stop the bribery. Well, it's not bribery, it's the market. People pay acreage and bonuses for getting oil rights.
And I would imagine the oil companies have to sign confidentiality agreements, don't they? I mean, that's
exactly
absurd. That's absurd.
And it is crazy. It was a crazy rule, and Trump has set that aside. So there's a couple. Those are both positives, but those are not going to affect the production of oil and gas. The production of oil and gas is already coming back faster than anybody thought domestically. It's coming back cheaper. The investors that are looking at new deals today are looking at those people who can bring oil out of the ground at less than $20 a barrel, or you can't even get their attention. And so that's what's happening in the Permian. That's what's happening in the Eagle Ford. It's happening in our leases in Luling and Lockhart, Texas. And this is not going to change. And these investors all know how to go to a chart. I can buy a collar on our oil today, that chart that I sent you guys out this morning. If you take a look at it, let me show you what some of you may know what a cashless collar is and others don't, so please forgive me for being elementary. And so when you see this chart from Jacob Williams at Cargill, and you look down WTI balance floors, you can buy a put for all of 2017 for $50.50 a barrel for $1.79. But if you want to find a really good deal, you go to WTI balance collars. Those are what's called cashless collars. If oil goes below 50.50, Cargill's got to pay me. If it goes above $59, I have to pay them. Well, I don't have any projection in my company of oil going above $52.50 this year and staying there. So if it goes above $59, lovely. I'm selling it for $60 or $65, and I got to give anything over $59 to them. No problem, because that's the best insurance policy anywhere. I'm actually using these collars to help me raise money in our company so that the investor can be guaranteed we're going to get at least 50-50 for our oil, and if it goes above 59, we're going to have to be satisfied with netting 59.
Tim, didn't you tell us about a year and a half ago that you thought projections would be around 53, 54?
That is correct.
A year and a half ago.
Yep.
Wow.
That was pretty good.
This is what the market is, and people just need to pay attention. And Mike, you've said it so many, many times over the years. People have got to pay attention to the market, and I just think that this 5-year chart is the collective knowledge of the biggest users in the world of energy. I mean, these are the big utilities, the big refineries, the governmental entities that control all of the electricity throughout their countries and the use of power. They're the ones that can afford to buy out 5 years and do. And they're believing this is going to be a very stable market, which is good if you're going to run your business in a stable environment. It's a whole lot easier to do that than in crashes and sudden zooming up of prices. I actually think it's very good for the long-term stability. I do not think it's very good for how high prices in the energy companies have gone this year. I mean, I think that the prices for energy stocks have gotten ahead of themselves considerably. But we'll see. It's all a bet, isn't it?
Wow. Yeah.
Hey, guys.
Yeah,
I have a
go ahead.
mover at my front door. I'm going to have to jump off.
Okay.
Right?
All right. Thanks, Charles.
Thank you, Charles.
Yeah, you look at this, Tim, and you think, okay, obviously, the big buzz on CNBC, it's 12 straight up days or whatever the heck they're talking about, and it's the Trump rally they're calling it and stuff like that. But it is funny to hear you talk about the numbers you're talking about, and I just happened to be thumbing through Bloomberg and from Hong Kong, and they're talking about oil, and I'm thinking, my gosh, this is what Tim told us about 6-7 months ago. Yeah, it was amazing, absolutely amazing. So tell us more about these charts.
Well, I think that the most important things that these tell us is stability. So when there's stability in the market but lots of oil flowing, that to me means the pipelines are going to do well. All of these pipelines that are out there today, it's still going to be harder to get new ones done. Trump did a great job of living up to his word, and he's gotten the 2 pipelines that were held up are going to be completed, including the Energy Transfer Partners one will be completed this month. They're going to flow oil this month. That's how damaging the Obama administration was, holding up a $3 billion pipeline, and literally within a month after Trump let it loose, it's going to be flowing oil in it.
Wait a minute.
That's good for the country.
Are you serious?
I'm dead serious.
Wow.
Look it up. Go Google Energy Transfer Partners pipeline.
Yeah.
They announced yesterday they expect to be testing the pipe for oil by the end of the month.
My goodness. Wow, and in just a month. That's an amazing story.
In just a month.
Wow.
And so these are the things. I think that the midstream is going to do very well in this environment because people are going to have a lot of oil and gas to move, and we're going to turn into net exporters. We already are net exporters in refined products, and we're beginning to export our oil. And we're closer and cheaper for all of South America than anybody overseas.
Yeah, well,
we can compete with anybody overseas right here.
Well, pardon me for being totally naive in this thing. Who do we export to?
Mexico buys a great deal of our refined products. Venezuela was until they got cut off for not paying their bills.
Yes.
Colombia does.
Okay.
So actually, 45% of the refined products produced in the refineries in the Gulf Coast are produced for export today.
Wow. Okay, now you hit the magic word, and Mike King has talked about this for over 10 years. What about refineries? I mean, are we ever going to see any new refineries?
Well, Exxon's got one new refinery that they have announced just outside of Corpus Christi. That will be the first new refinery in the United States in 50 years. However, the Saudis have been building refineries and have built some major capacity. There's a lot of capacity coming into the world of refined products over the next 36 months. So I think that we're also going to see competition in refined products that we haven't seen before. You know, the Saudis are as shrewd an investor as there is out there, and they knew they had to do more to add value to their production because of the long-term pricing scenario being what it is. And they have been developing refineries now for several years, and they're coming online and they're competing, and it's driving down prices. And you're seeing the prices of NGLs have fallen from when these facilities were being built. NGLs were at $12 to $14 per MCF, and now I think in Japan, last thing I saw, some spot prices at $6.50 and $7. So it's a more competitive environment. So only the very best producers, the most efficient, the most integrated, who have their transportation systems. And I think it's going to be very good for the internationals myself.
Okay,
except if we pass this border adjustment tax, it's going to be. I don't even know how to assess that. It's so confusing.
You think you're confused? It's like you hear the news every day and you think, what else could happen? But I mean, yeah. Okay, so what kind of a negative effect will that border adjustment tax have if that ever comes into play?
It could create a trade war, and if the first place that Trump decides he's going to do it is if he keeps up this tiff with Mexico, and he puts a 20% tariff out on Mexican goods, and they say, oh, well, we're going to put a tariff out on your goods and go back and forth, it could be Smoot-Hawley all over again. I think that this whole issue of tariffs is the most dangerous issue facing the economy worldwide today, because everybody will retaliate. And, I mean, it's a very, very dangerous time.
Well, now, wait a minute. Doesn't China charge tariffs for, like, American cars and stuff like that?
I didn't say that the current environment is fair. I'm just saying,
okay.
If everybody starts retaliating, it isn't going to work. And Mike, as you know, we talked about this years ago. I think I wrote a report on this years ago. I am a great fan of a consumption tax to replace the income tax, to get rid of all of the underground money, make the drug dealers pay their fair share, make all the guys that work for cash pay their fair share, and that it could have a more balanced approach across the economy than just hitting imports. Because we depend on imports for, those polo shirts that you wear that are so cheap now, and you see all these people advertising on the internet custom dress shirts for $28. This is all because of imports. And it will definitely affect the cost of living in the United States, because we don't have the capacity to magically replace textile manufacturers in China and Vietnam that work for a quarter of what U.S. can produce it at. There will be things we can produce better, certain manufacturing items, certainly robotics, technology, but I don't think we're going to magically bring back the textile industry, not at our labor rates.
Right.
So there are imbalances here that have to be dealt with, and they're just not magically going to go away.
Mike, any other questions for Tim? This is fascinating, Tim. Go ahead, Mike.
No, it was in the 1965 to 70 period that we lost the business to Asia. That was the period.
Yeah, well, that would have been right. And again, wasn't that kind of a tariff issue in the late 60s, early 70s? I think.
Right.
Yeah.
Let's welcome Andy Seal.
Wow. Well, Tim, Andy, hold on just a quick sec here.
Well, guys, thanks for letting me come on, and I'll let Andy come be featured on your show as he should be. It's his time, and I enjoyed it, and I'll talk to you next time I'm on with you.
Hey, Tim, is there any way you can get that chart to Mike King so he can put it up on his website so our listeners?
Yeah, he's got it.
Okay.
Mike's got it.
Yeah, Mike, if you could put that on your website. Wow. Okay, great. Good stuff, because that's...
okay, guys.
Okay, Timmy.
Enjoyed the show, as always.
Oh, yeah. And you're a newsbreaker, as always, I swear. It's Mike, he comes up with mega stories every time he is on the air. Amazing.
He really knows the oil business.
So, yep. So we're going to put pressure on Andy Sealfond to drop another bomb like Tim Connolly just did. Oh. Hey, how are you, Andy?
Oh, I'm doing good. I hope I don't lose my voice here.
Yeah, wow. Yeah, you've been screaming, trying to get those subways in New York. That's what it is. Whoops.
How's everybody doing today?
We're doing
Very good.
We're doing fine. So, how is the worldwide tour of RMS Medical going?
Well, last time we were talking about what was going on in Europe for RMS, and that's what I think was on the agenda to talk about. We're expanding nicely in Europe. We have a really fantastic new distributor in Germany we're working with, and they visited us. It's one of the reasons why I couldn't be on a call earlier, because there was a conflict in the timing. They brought their entire team here from Germany to meet with us, from Nuremberg actually, and we have a lot of common interests. This is kind of a unique opportunity for them and for us. Their primary mission in Germany is to provide the medical services directly to the patient and bill the insurance, so the reimbursement between the reimbursement and the services they provide. And so they're not really geared as a conventional distributor in the sense that they just buy product and sell it to a hospital. They actually provide the service directly to the patient, and it happens to include our system. This is run by an ophthalmologist who cares passionately about providing patient quality and is very careful about the services and products he provides. And so we think this is going to be a huge opportunity for us to work together to really provide significantly improved patient care, as well as open up a lot of new markets. The first thing that they did was begin using our needle sets for treatment of Parkinson's disease, which is something that we don't do here in the United States. And it's, again, a huge opportunity. The Parkinson's is a fairly common condition, and it's a tricky drug that they're using subcutaneously. It has some major challenges in that it's very acidic and it's difficult to infuse, and patients get reactions to it and so on. And we're pretty sophisticated in our understanding of what do you need to do to get subcutaneous tricky drugs into patients without harming the patient. And so this is something that we definitely can do and impact. We're also doing several trials around the world using our systems. We've started working with a pharmaceutical company to introduce Russia to this type of therapy. I have some great personal relationships with Putin. Actually, that's not me. It's our president, but I'll take credit for it.
Yeah, certainly. Well, you know, you figure Putin hacked the Academy Awards, too, so what the heck.
Yes, exactly.
Have you seen that picture that's going around Facebook right now? It's a picture of Putin without his shirt on, and he's holding the envelope that says movie of the year. It is hysterical. Oh. But seriously, now this is this kind of concierge doctor that is doing all of this, or this sounds amazing, an ophthalmologist.
Yeah, he was trained in ophthalmology. Kind of an interesting character, actually. He decided that he didn't want to be a practicing ophthalmologist, and he walked away from his profession. His family thought he was crazy, and he just decided doing ophthalmology his whole life was not interesting to him, and he quit with nothing. And he took a job with a pharmaceutical company. They were looking for an ophthalmologist, and they trained him in marketing and everything. And he did that for about 4 years, and they were moving him all over the world. They wanted him to go to Russia. His wife said no, and they were moving him to Indiana somewhere. And he's thinking about this, and he said, you know what, I'm just going to do something on my own. And so he started this niche company, and it's quite an interesting service that he provides. And he has the passion of great medical care, which absolutely coincides with our passion. As you know, we're trying to make the patient experience as perfect as we can get it. We're trying to have the most successful patient that we can have. And teaming with somebody who has the same passion is very refreshing. A lot of distributors want to do the right things, but they're basically distributors. This is a gentleman who is absolutely passionate about the patient quality. He's looked at all the competitive products. When we say, this is what we're providing, our needles are the best, he doesn't take it for granted. He pulls out a 200-power microscope, and he looks at the tips of all the needles, and he said, my God, you're right. These other needles are bent. Like, why would we use them? And then he looks at ours. So he's really verified what it is that we do, and we do get along great. He is a remarkable person, and so we do expect and anticipate very, very good results, both for the patient, and when we get good patient results, we expect that to mean good sales, good revenues.
Now, Andy, is he just in Germany, or is he around the whole EU?
He is in Germany, but he is teamed with a pharmaceutical company to provide this Parkinson's medication through major parts of Europe, if not all of Europe.
Wow.
And so, we are looking at how this is going to work out. This looks like it's a fairly significant market. Our needles are ideal for it. Our pump, not so much. The drug is inserted at very weird flow rates and very programmed times and so on. And so we're just looking at that now to figure out whether we can handle the whole system or we would just do the drug part of it, the needle part of it. But it's still a very big opportunity. It was unexpected. It was very serendipity that, he was talking to us and he had a need for finding a better solution to get this. The drug is called apomorphine, and to get it into the patient subcutaneously is quite tricky, and that's our specialty. We'll figure it out, and we have figured out. We've provided some ideas already that have proven correct, and so we're developing these markets, and the same as in Russia. I mean, the pharmaceutical company selected us from everybody else and made us agree that if they do the clinical trial in Russia, that we will agree to make our products available in Russia, which is not a small undertaking. They have a boatload of regulatory issues, and they have a bureaucracy second to none. And so we have to overcome that, and we are. We'll be doing that and working with them on that.
You mean a bureaucracy bigger than ours?
No, I didn't say that. But
yes, yes. Well, now, okay.
But we're going to reduce our bureaucracy by 90%. So it's
we
going to be
probably
fine.
will. Okay, let's get back to that drug again. Are we going to see that in the foreseeable future in the United States?
I don't know. We're just starting it in Europe, and so we're understanding it. I don't know whether that drug will be able to gain acceptance in the United States and how quickly. But it's something it's certainly very interesting. they're using it quite successfully in Europe.
Well, you know,
It's opportunity.
What truly amazes me is, dealing with a lot of world-class athletes as I have over the years, and these guys are going to places like, France, Germany, and even Russia for various types of operations and or medicines for their respective problems. And it seems like they're light years ahead of us. Is that true?
Well, in some areas, that's absolutely true, in my experience. We have a lot of inertia here. Obviously, we have our differences with FDA, and, we have a very difficult process which can inhibit growth in the medical area. Some countries have specialized in areas that are very important to them. Israel, for example, in fertility. So they have advanced quite well. They have a very strong R&D program for that. And so then there's the cost issue. Obviously, a lot of people are seeking treatment out of the country because it is lower cost. And in some cases, the technology is quite good, if not better.
Wow, that's absolutely amazing. Mike, questions for Andy?
No, it's incredible. And how about Scandinavia? How are your sales going?
Scandinavia has been using our system for some time. We dominate the markets of Finland and Denmark, and we're pretty strong in Sweden. They are the birthplace of subcutaneous immune globulin, that is, Sweden is. And so Scandinavia has been using subcutaneous immune globulin for the treatment of primary immune disease since the 90s. So they have the most experience of any group that is using it today. And, of course, they could see fairly quickly the advantages that we provide. Our method of providing the immunoglobulins to patients is that when you put a drug in subcutaneously, you're putting it into a little area under the skin, a little pocket or a depot, and it's a little bit backwards to the way everything else is done in medicine. When you start a drug into the vein, you start very slowly, and then you see how it goes, and then you speed it up to the rate you want. If you do that subcutaneously, it's exactly backwards, because when you start the drug, these little sacs that you're putting the drug into are empty. And so if you start slow and go fast, it has the effect of overfilling the little sacs and then causing pain and inflammation. And so all these little tricks with things that we developed with clinicians and we can help with. And our pump, the Freedom System, provides a way of the system reacting to that buildup of drug in these depots. If that happens, our system immediately and automatically corrects and reduces the flow rate. So that reduces the potential for inflammation, for pain, for swelling, redness, itching, and all the problems that you can have when you try to put these drugs into the body subcutaneously near the skin and so on. So these countries, Scandinavia in particular, were fully aware of those kinds of complications. They'd been doing it a long time, and so they could immediately see the benefits. We also in Scandinavia recently completed a couple of trials. One was for a drug that uses what is called facilitated SCIG, which can put in huge volumes into the body by cleaving the molecules apart and allowing these large volumes to be infused at one or two sites. And the question was, can this be done at home? And it's very complicated to do at home with electric pumps. And so we came up with a way of using our Freedom system for this. Hugely successful. Patients found 95% of the time it was very, very successful for them. And you can't get a patient's satisfaction rate much higher than that. So that was very successful. We also did a fantastically interesting study showing exactly, and this was in Sweden, in Scandinavia. So you can see how advanced this team is over there. They studied exactly what length of needles you need to be successful, and in part of the study, they determined how much drug volume causes problems, what kind of rate effects cause problems, how patient satisfaction is related to these adverse events that occur at the site. And they found things that nobody had ever even thought of. We always believed that when you're putting in a needle into subcutaneous, you put it into the fat layer, and the more fat you have, the easier it's going to be. And this study kicked out the exact opposite effect. Everybody had always thought that for patients that have a lot of adipose tissue, that is a lot of fat tissue, it'd be very easy to do subcutaneous infusions. And the difficult patients would be those skinny little people that have no depots, no fat, and that have, or these muscle-bound people, these people who work out all the time and they're 100% muscle. Well, they have no subcutaneous tissue there, so how are you going to get this drug into them? And it would be terrible. And what we found in this study is the exact opposite is true. The strong, lean ones and the skinny ones do fine, and it's the people with the belly fat that actually ran into more problems. And so this is the kind of research that we do, and obviously the Scandinavians have the most experience and get the most interesting results that are contrary to what is popular wisdom. And that allows all of us to do a better job at treating patients. That was a long-winded way of saying, yeah, Scandinavia is pretty interesting to us.
Yeah, well, it sounds like it. Now, I notice, okay, you've talked Germany, you've talked Scandinavia. You haven't mentioned anything about the lower-tier European countries. Are they kind of coming along, or are they just kind of float along?
Well, we've signed a new distributor for Italy.
Okay.
We're doing very well in the UK. That looks like a continually expanding market for us. We are looking at other countries around the world, not just Europe. We're beginning to talk to the pharmaceutical companies who are introducing their drugs in Asia, and we have contacts over there. And so we're working on opening other international markets. In Europe, we have a team in Europe that is looking at the Baltic states, for example, former Soviet countries. Some of the countries are kind of hard to get into. We are talking to them. Spain, Greece, they have financial issues, reimbursement issues. The need is there. Right now, the economics are not so favorable to add anything to their reimbursement program. France is France. They have a need. They are using it. They have a lot of bureaucracy, and we are working with them to overcome the problems that we have in getting our products accepted for reimbursement in France.
Wow. What amazes me is the international perspective all of you guys seem to give to the show, but the fact that you talk about the government bureaucracies in a lot of these countries, and you realize it's like, my goodness, it's like the government just seemed to kind of get in the way, of a lot of the progress.
Yes, I think it's not that they get in the way, but reality is that you have to raise revenue to pay for all of these things. It's really just follow the money. and it's true worldwide. In most of the countries, the medical care is reimbursed either by the government directly or indirectly by quasi-government type insurance reimbursement agencies. And so the revenue streams are critical. Everybody has a constituency, so it involves politics. And so whenever you have politics and economics colliding, you end up with favorable reimbursement for one type of thing and not so favorable for another, and everybody's fighting for the resources. I think it's pretty expected.
Wow.
Is there a better system
America?
you can think of?
It sounds frustrating to me. I just, I can't even comprehend that. Mike, you had a
Well,
question?
there are two issues in every country. One is the regulations of medical devices, and the other is the reimbursement of medical devices. We have to overcome both of those, and that's a country-by-country situation. So for Europe, if you have a CE marking on your products, you could sell it in any country. So the regulatory part can be covered, but then you still need to get the reimbursement part. And so you have to get everything lined up before you can be successful in any country. That's what the challenge is, and that is a country-by-country basis. So, yeah, it's work.
Wow. Yeah, it sounds like it. Mike, question for Andy?
Well, it's a unique, very unique product, of course. And how about Latin America? What's happening there?
We know that they're beginning to move into Latin America, it's a third-tier priority. We're looking first to deploy into Europe. There is definite interest in Latin America. We need to identify appropriate distribution channels and partners, and we're in the process of doing that as well. There are some additional challenges in Latin America. Their reimbursement systems are also under great duress right now. Some of the countries are quite difficult to work with. We had started, for example, in Brazil, and the Brazil bureaucracy is pretty challenging. We have RescueVac in Brazil. We have distribution channels there, but bringing in the infusion system was a whole different level that we're working on. We're talking to people in Argentina and Mexico. So those are the highlights of our South American strategy for the moment. But we're definitely have it on our list.
Yeah, well, obviously, for you, the reimbursement part is probably the most important. And, you hear a lot of horror stories about Brazil and even some in Argentina as far as paying bills, and obviously you need to get paid.
Well, it's a challenge. As you may know, some of these countries, they run 180 days behind payments between the service and before they can get paid. And so the carrying charges are enormous, and so you have to build all of this into your pricing structure. All of that does create speed bumps before you can be successful in that market. It's not just us. I mean, it's not like our equipment. Like, it's the whole process.
Sure.
The biggest cost is the drug. The drug is thousands of dollars per dose. We're just a little tail on the end of that. So once you figure out how do you get reimbursed for getting a drug administered into the patient, that's the big challenge. And that's where an awful lot of money is in the float. And that's where it takes a lot
How
of
much is the
perseverance.
immune globulin in America?
It runs about anywhere between $1,200 and $2,000 per dose. Typically, the dose is done weekly.
Wow.
That's expensive.
It's
wow.
generally about $100 a gram, and your typical dose is anywhere, that's it was $100 to $140 a gram, depending on which drug it is, and your dose is about 10 grams at a time.
Wow. Oh, my goodness.
Average. I mean, for an adult, normal adult. So it's in that range, I think. I'm not an expert on the pricing of this stuff, but, the cost of the infusion equipment is only a few percent added to the cost of the drug. So the drug is what's going to drive everything. It's reimbursement on the drug side. If you don't have the drug reimbursement, you can't afford anything. So the equipment doesn't matter. Once you decide you're going to pay for the drug, then you want to get that drug in with as least problems and as most efficacy as possible, because the drug is so damn expensive. You certainly don't want to waste it, and you certainly don't want it to end up where it's causing patient complications instead of doing the job it needs to do. So that's where the benefit of the equipment against the cost of the entire therapy is so much in our favor. Having an effective way of getting this very costly drug into the patients is paramount. And we provide that type of support to ensure that the patient gets the great results for this drug.
Wow, phenomenal, Andy. Andy Sealfon, the president and CEO at RMS Medical Products, and pretty easy website, too, rmsmedicalproducts.com. And
REPR is the symbol.
Oh, and REPR, correct, is the stock symbol as well. So, Andy, phenomenal information as always. And we will be talking with you down the line. And hey, keep it going. And it sounds like the Swedish and the Germans are light years ahead of everybody. So it's congratulations to you on that.
Thank you.
All right.
Have a great day.
Okay, Andy Sealfon, who is president and CEO of RMS Medical, and before Andy, Tim Connolly, who's the oil expert, Mr. Mike King. Unbelievable. And Mike is already, to show you how efficient he is, already got all those charts that Tim Connolly was talking about the looking ahead 5 years in the oil industry. Wow, great to have these resources, isn't it? Wow. And don't forget, PrincetonResearch.com. That research letter comes out every Sunday. Just go to the website, sign up, and it's yours. Money Info every Tuesday right here on WPSL, Port St. Lucie, WPSL.com, webcaster to the world, and WPSL TV on YouTube.